Hey everyone, we're live. Shane here from Rogue Trader Academy with Deribit Live. Good to see everyone. Got some new stuff today to talk about. I'm excited about that. And first of all, can please tell me if you guys and gals can hear me? Please let me know in the comments. Ivan from Vienna, good to see you. Sergey. Ken from Melbourne, yes, got the Australian crew on today, excellent. Giandrea from Italy, always nice to see you. I don't know if you've ever missed an episode, Giandrea. It's always just lovely to have so many regulars here. Great, you can hear me. Thanks very much, Core. Harley, oh, New Zealand. So we're gonna have a little New Zealand versus Aussie face-off today, maybe. Ooh, exciting. Nice rivalry there. Okay, so as you can see, oh, I'm on mute. No, I shouldn't be on mute. Okay, Ivan, you can't hear me, but everyone else can. So, Ivan, I think it's something on your side, not my side. Oh, and there's Richard. You might have noticed Richard is not with me, but he is with me now. Richard has kindly decided this because he's on the honeymoon, of course, somewhere off in the south of France at a chateau. And so we all know his internet's a little bit sketchy. So if there's any audio problems when Richard is talking, just dealing with that. He'll either try to adjust it if he can, or he'll just have to be quiet. Yes. I don't know what else we could do. But this week he's on his honeymoon, and of course he didn't have to join us, but it's great that he did. All right. So lots and lots of folks joining here. And I got something different today, too, for everyone, which will be quite exciting. Give me 1 second here just to make sure I've got we got some people from Lisbon today, too. Wow, we got so many people on today. It's wonderful. Great, wonderful. Publish this. Okay. Let me queue up today's call. And I didn't tell Richard, but hey, Richard, can you hear me?
Yeah, I can hear you.
Oh, okay. Oh, there you go. I see you got a little bit of a delay. So, of course, actually, if you could just say something, Richard, let's see if everybody else can hear you, okay?
Yeah, I've only got 2 megabit connection here, so it's pretty sketchy.
Okay, that came through pretty clear. So we'll see how it goes. I actually decided to do something just before this call that I didn't tell Richard about. So it's going to be a little secret. It's a little bit surprise, but I think it'll be a lot of fun. All right, so let me just talk about today's agenda here. We'll queue it up. So as usual, we're going to go through some charts, look at what trades we got on, kind of give some analysis about what's happening, go over some metrics, and we're going to talk about the broken range because, of course, the range is now broken in crypto where it was for most of the summer. So what are we doing right now? How are we setting ourselves up to profit right now? What are we looking for? All that good stuff based on volatility, direction, technicals, everything else. And of course, Richard and I do that completely differently, which is nice because it gives you guys a couple of different perspectives. And then we'll do some Q&A afterwards. We have a hard stop around 30 minutes. And of course, and you can see this in the bonus area if you want to join us every day of the week. Anytime you want, just go to roguetrader.academy. Any package selection above silver, you get the interactive trade and talk with us. You can chat all day long and get the monthly or the weekly Ask Me Anything call, which is always a lot of fun if you want to take things to the next level. All right, so let me just go back for a second, and you can see that in the offer as well. So this is the new thing I'm talking about. Let me just make sure this chat is okay. We've got questions already, of course. So this is going to show up in the poll, and I'm going to publish it right now in the poll, but it's actually, well, it is a poll, but it's a little bit different. I decided to do something different today because this is going to carry us through for the next little while. All right, check it out. I thought what we'll do is we'll do a consensus trade. Now, don't feel like you have to put your answer in right now. Maybe wait till we look at some charts and get some ideas. But let's make an execution. Today, let's just talk about doing an Ethereum execution. And let's track the opinion. So whatever the majority thinks we should do, I'll execute that trade where we are right now. And we'll discuss the details of strikes and expiry dates closer to the end of the call. But here's 4 options, things I was looking at the charts. Would you guys be more comfortable? And I'm trying to keep this fairly simple. So there's newer traders on. I'll explain some things so that we don't get overly complicated. What do you guys think about doing a diagonal, a call diagonal? So we think our bias is up. How about a put diagonal? Our bias is down. And a diagonal, of course, is buying a long-term option, let's say November or December, and we're going to sell the weeklies against it to make it free, okay? Or cost less or whatever. Or do something sort of delta neutral-ish. Won't necessarily be exactly delta neutral, but something like an iron condor. We're selling volatility on each side. That would mean that we don't think the market's going to do a heck of a lot in a certain period of time. Or do we have one side bias where we just want to sell premium on the side we don't think it's going to go to? Or do we want to do a debit spread, get a bias? So if you think it's going down, maybe we just want to do a debit spread that direction. So 4 options there that I would consider. And again, don't feel like you have to put your answer in right now. And I'm not going to load the boat on this trade either. You know, we can just go with a few contracts, or we'll just see how it goes. If I love the idea, maybe I will load it up. But let's just see how this trade plays out, how the majority, how it plays out for the majority of us, the consensus. So very democratic. Going forward. So, Richard, that was my little surprise. I decided to do this today. So
I like it. You're getting trading advice from our viewers rather than giving it. That's a good idea. Yeah.
Yes. And if they're horribly wrong, we can say, I told you so. And if they're right, I'll take all the credit. So yeah, it's a win-win for me. Yeah. Perfect.
So, someone's going to be right here. Yeah.
Yeah. Hey, let me jump over and take a look at some screens, some charts. I got a couple of new trades on since last week, not too much. So let me just share my screen. My silly charts here. Can you see this?
Yeah.
All right, probably. Okay. Again, Bitcoin, I don't have anything on yet. I will have some things on in the next week or two, but you know, just looking at the chart, okay, it looks very similar to Ethereum. Similar in that it kind of made a move and now it's holding a range. So we can see here that I have, same as before, I've still got the diagonals. Okay, I've added a little bit more. I'm chipping away. I'm adding a little bit more to those diagonals when one side or the other gets a little bit cheap. I'm just adding more long calls or long puts that are further dated. I love doing that. Not a big deal. As I've mentioned before, these diagonals are meant to pay us off in that direction. And we're selling premium against it in the weeklies. So hopefully, if it doesn't go anywhere, it won't cost us anything. If it does go somewhere, we're hoping it does kind of slowly. In the perfect world, the shorts will pay us and the long will pay us. Doesn't always happen that way. Now, I did put on, I did sell some September 22nd naked calls. I did that yesterday and the day before, just because my premium theta decay was getting a little low and I wanted to earn some more money. So I did that. Those expire September 2nd. You can see this line is when I opened it and when it closes. I did one other thing here too. I opened up a put credit spread. I feel that I still feel oriented towards the downside, but you know, we could go sideways for the next few weeks. So I opened up a 1,400, 1,500 put credit spread. So from here, if we think about our poll, here we are, and I can, you know, I'll zoom out a little bit more for a little bigger picture because we're going to trade ETH in this particular case. And maybe Richard will want to do something in Bitcoin next week. I don't know. We can talk about that. But here we are. We're trending sideways. Do you think we're going to go up? If so, we might want to do a debit spread if you're feeling pretty strongly about it, or a diagonal if you think it might take a bit of time. Same thing on the downside. Or do you think we're just going to keep going sideways for the next 6 weeks or something? And we can sell some iron condors, for example. Or if you think we're more oriented towards the downside, but maybe slow, well, maybe we'll sell a credit spread on the call side. Okay, so those are some options looking at the chart. Again, I'm still oriented down, but you know what? We've got a lot of resistance here. We could easily pop up to 1,800 like nobody's business. So nothing is off the table. I never try to make predictions, but I want to make money regardless of which way the market goes. Richard, I know you don't have the best connection over there. Are you wanting to perhaps try to share your screen, or?
Let me try. I'm not sure I've got a huge amount to say because nothing's really happened. I mean, other than the fact we had that wick. That's something I did want to talk about actually.
And before you start on that, yesterday we had a bit of a move in Ethereum, like it went down $50 and up $50 and ended up coming right back to where it came from. And I assume that was from ARK, the fund. I think they're applying for an ETH ETF, like basically what happened with Bitcoin. I think that's what happened. But ultimately,
okay.
the price didn't change.
Yeah, because I'm out here in the wild, so I didn't really have a news flow, and I just assumed that somebody fat fingered the market. But was that wick also reflected in the spot market as well, or was it just in the futures market?
That is a good question. I actually don't know.
Yeah, because I actually all I was going to say about this was that we continue to drift down, and in my strategy, a drift down on lowering vols is never good. But so I bleed a couple of percent during these times. Not that I'm at all worried about it. As soon as we break out either way and we start to pick up vols, I make money. But I've basically been doing the same. I've been selling some calls and selling some risk reversals. The put legs of my risk reversals are now in the money, or a lot of them. And I have been trading out of them, been selling them just to remove the decay, just because I don't really believe there's too much more to be gained for me being long gamma on the downside. I mean, we could go down a couple of thousand, right? But I just didn't see any. For me, the long legs on the risk reversals are actually acting as a gamma trap or a Vega trap for if we get a sudden falling off a cliff. So I'd rather buy those in the money ones back and then resell. I beg your pardon, sell the in the money ones and then buy further out of the money. So I'm kind of rolling down.
Mm-hmm.
On that wick, these wicks I think are more to do with the depth of the depth of liquidity we're seeing in the markets, which is low. Any bit of news causes a very, very short-term price movement, which is immediately reversed.
Mm-hmm.
Certainly within a few days, but sometimes, as you see there, within a few minutes.
Mm-hmm.
And it kind of makes it a difficult market to call because there's so little liquidity in the market that if there's a sudden change in sentiment, it could move fast either direction. So it's kind of getting, so I'm still selling vol, but I'm just getting more and more cautious about, wanting to pick up some longer dated. So I'm buying longer dated and paying for it with short term sales of shorts.
Yeah, I agree. It's starting to feel a little bit dangerous, and we knew we'd start to feel that towards the end of summer, especially if nothing moved. We knew that, hey, a move is coming no matter what,
right.
And we have to be careful with that. So basically, right now, I think this chart's a little bit tough to read. While I still am oriented towards the downside, certainly on ETH, I don't think it's got some resistance to get through or some support levels to get through. Unless there's a news play that it'll blow right through it. As Richard mentioned, there's not a ton of liquidity right now. There's a lot of people are still kind of away. I think we'll need some action to attract more players back in and build up some depth on each side.
I think sorry, there's probably a small delay, but I'm probably cutting across you a bit. I think there's also, it's becoming much more apparent the macroeconomic position, particularly in the US, and that's going to bleed out to Europe and Asia, which is around, these interest rate hikes are not temporary; they're baked in, and they're going to continue. And people are going to start finding it difficult to pay their mortgages, and loan delinquencies are already up in the US. People are now finding it cheaper to rent property than to buy it, and that's yet to bleed out into the wider global market. So I think there's a question mark in my mind about how much spare capital people have to get behind a rally, right? So it might take a bit longer this time. This halving, might disappoint people. That's kind of my feeling at the moment. The world can change on a dime, right? But
it certainly can. And Ken just mentioned too in the chat. He said, "Aren't we going to get a bit of a capitulation wick soon?" Very possibly, and I think that because it's such not such, but it's fairly low volume right now, and not a lot of depth. Regardless of which way we go, I expect to see a wick on the opposite side. I mean, that's kind of normal in any trading market, but in a thinner market, they can make that wick a little bit nasty. So just be aware that might happen, and it'll be a fast thing. So that's actually an opportunity for a near-term expiry or a 0 day to expiry, like a gamma opportunity, where you see a big wick down with no precursor in front of it. You know what? I'm going to buy that because there's a good chance it's going to bounce right back up, or at least retrace a big chunk of it. I can make some good dough on it. But it's one of those things where you got to be Johnny on the spot. You got to be sitting in front of a computer or get a notification on your phone or something, so you can jump in there, because usually they don't stick around for hours waiting for you to get to your computer. So that's that. So going back to kind of looking at the charts and what I think and how I'm positioning myself, again, I am just happy to do these diagonals because I feel there's a good chance we could go either up or down from here, and I'm not going to try and guess either way, but I want to be prepared. I don't know if it's going to happen slow or fast. If it happens at a slower pace, those diagonals will be beautiful, just beautiful, because I could potentially make money on all the shorts as I just slowly, as they depreciate, or I have to roll the odd one. But that long is going to make some good cake. Who knows? Now the poll coming in is coming in at iron condors, delta neutral. So I guess what everybody's saying right now is we think we're probably going to go sideways for a while. So I think what we need to talk about right now, before we jump into questions, is okay. I've got no problem putting on an iron condor. Now I'll probably put on a broken wing because I'm a little bit leery of the put side. So I'll break that wing, and it's easier to manage the calls. But what type of expiries do you think we should do? Put it in the chat. If you think, hey, we should be selling 2 weeks out, do you think we should be 30 days out? Do you think we should be out into October, which I'm not going to do, even if you think I should, because I got a feeling that the market will break then, but we'll get some better premium for it. And also looking at the volatility surface, as usual with crypto, that long-term calls, everybody's a bit bullish. Short-term in ETH was really heavily skewed to the put side over the last few days. Now that's calmed down. At the very, very near term, it's that's high vol there. But ETH just moved down $10 in the last 2 hours, so that makes sense. But give me an indication of what you guys think in terms of strikes for ETH and dates. And afterwards, after the call, I'll take that information and I'll put a trade on, and we can talk about it next week if that's cool. And are we getting some? Okay. Dom says as close to 35 DT as possible. All right. Yeah. Fair enough. Okay. Well, again, I'll take this information and we'll carry on. Let's, Richard, unless you have anything else to add, do you want to jump on to Q&A because we've got 10 minutes left? You're good? Okay. I didn't hear you. Maybe you're on mute. I'm not sure, but yeah, that's okay. So Dom asks, do I always take a trade-off at 50% profit? No, I don't. It really depends on the type of trade. If it's a covered call, for example, if I've sold a call and it's covered, I'll take that off closer to 90%. I'm looking to extract almost all the value. If it's naked, I'm probably taking it off somewhere around 25%, or at least a portion of it at 25%, and I'll scale out of the rest. 50%. Can be a nice even number, and it depends if we're looking at crypto versus stocks or indices, because they're all going to be a little bit different. On stocks and indices, I'm a little bit inclined to take it off earlier. That's I shouldn't say that. It just depends on the year we're talking about in crypto. Oh, sorry, Richard, are you there? We don't hear you, my friend. No, we don't hear you. I'm not sure if you're a headset or mute or whatever, but the pitch is fine, so I assume your feed is okay. So it's also a personal thing, and I'm a huge fan of scaling in and scaling out of positions. Always have been. So in terms of your percentage, I always feel it's a good idea to take some profit off the table when it's there, and then let the rest ride or stagger it out. But it depends on if it's covered, naked, or part of an iron condor or a credit spread or something. How do you hedge sold calls? I saw your MM from last webinar, 71%, 10-point Bitcoin grow and liquidation. Welcome. I think that's probably a question for Richard. Okay. Oh, Richard left the room, so he'll probably log back in. A question from Sylvanus, and this is a funny question. It's a good one. How can I trade like Richard systematically? Well, that's a good question. I'll have to let him answer that. But the way which algo will I use to automatically delta hedge? Now, there's a few free ones out there. I think we've talked about them in the past. I'm going to let Richard, he's coming back on now, talk about that. Now, I know Richard built his own. So,
hi, can you hear me?
Yep, I can hear you now. Yep.
Okay, so yes, I've rejoined, but I've lost. I don't have any of the questions. So you'll have to read them out to me.
Yeah, no problem. Actually, I was just kind of answering partially one for you. So Venus asks, how can I trade like Richard? I was going to say you need to be dashingly handsome, but I thought better of it. Basically, you're just saying which algo to automatically hedge your delta.
So that's a matter of personal choice. I actually have chosen a timed algorithm. I just hedge every hour, regardless of what the delta is, and I hedge to zero. My back test showed me that was as good as anything else. And I have a little bit of a gamma catch on there as well. So if the gamma gets bigger than a certain percentage of the book, then we also limit the amount of delta in the book, just to catch any runaway moves. And we do that because we trade unhedged. But if you, so the downside of that is that if you get wicks and they're big enough, they do get hedged by the gamma limiter, and that can be against your interests, because if you've got a wick that disappears within the hour, then why hedge it? The way to counteract that is to buy cover. And in fact, now that we've gone into much lower vol markets, whenever options get cheap, I buy them back. So whereas before I would have let them expire worthless, these days I actually put a small order in for 4 or 5 bips to get them back, just so I don't have too much short-term gamma lying around, just in case there's a wick, which would cause my hedger to go nuts. But in general, you don't lose money hedging by hedging less frequently. The longer you can leave it, the less money you'll lose.
Cool. Flo asked if I could put my chart up again. That's why I threw that up for a minute. So Flo, hopefully that's good for you. So just going back to a Q&A. So I had an interesting one from Stanislav. He put this up right at the very, very beginning before we started talking. He said, I think I spent too much on hedge. Okay, that's a pretty common thing to say. Delta hedger is enabled plus straddle, 60 days plus 15 days, 1 put. Because of this, the profit from the sold volatility is quite small. It's difficult to recover from previous losses very slowly. Also, at the moment, volatility is so small, it's very little money. What to do? How to understand what amount of puts you need to become crash-proof and maximize profit at all. My trading style looks more like Richard's does, is what they say.
So you don't need, if you're delta hedging regularly, then most moves you'll catch anyway by delta hedging. If you're hedging regularly, you need to be hedging as maker, because otherwise you're going to burn all your profits on taker fees. I haven't actually back-tested hedging more frequently than hourly, but I would imagine that if you hedge more frequently than that, although you'll get a much better hedge on the upside because you'll follow the grind up, it probably wouldn't help you on the downside because it's never going to catch a wick down by $1,000 on Bitcoin or $100 on ETH. So having, I kind of like to have as many sort of $25, $30 puts as I've got Bitcoins in the account. As a rule of thumb, it means I do burn quite a lot of theta, but I actually have a lot more calls, so I make my money on the calls generally. Mm-hmm. But actual limits, that's a complex question, and it depends on your trading style and what positions you've got on. Mm-hmm. If you're trading out at sort of 45 days plus with an iron condor, probably hedging less frequently might be the answer, because you're going to hopefully be quite far away from the money anyway. Mm. And you've got time. if things go wrong. And as ever, it's probably more to do with putting on that iron condor in little pieces at a time rather than all in one go. Because then if you do get a move up or down, you're getting the rest of the iron condor on at the right price. Sorry to be worried about it, but it's a hard question.
Yeah, and as regarding our poll question, we got 61% saying, "Hey, let's put on an iron condor, delta neutral." I'm not just going to lay that on instantly. I'm going to look to where the premium is, try and extract most from that side. Now, I do run the risk. Let's say I'm selling on the put side, and then the market tanks. Well, I missed my opportunity to sell on the call side. I'll have to wait for a bounce or something else, and sometimes that happens. You intend to put on a position, it doesn't quite get there, but you want to leg into it or scale into it. Okay, what do we got next for? Okay.
That's just to follow on from that question. Look, if this was easy, this idea of systematic trading with an automated delta hedger, and it just always brings you money, well, you'd be sitting where I do. It's hard, right? You've got to work at it and do your data analysis and monitor it, and look for the value, because in the end, I'm looking to trade relative value on the vol surface. I'm looking to catch market makers out. These guys are not stupid. They put a lot of effort into getting their vol services right. So it's a bold move for me to go out and tell them they're wrong.
All right. Okay, we've got 3 minutes left. A question from Sergey. How do you hedge sold calls? I saw your MM from last webinar, 71%, 10% Bitcoin grow and liquidation. Welcome. I don't quite understand. Well, the first part, how do you hedge sold calls? I'm not sure if you're talking about a covered call.
So he's saying if you're short calls and presumably not covered, then how do you hedge that position? Well, that's exactly what I do. And that's because I delta hedge hourly, and so I'm only ever up to an hour wrong in terms of lost value. And my gamble is that I'm selling calls for more value than they are really worth, i.e., I will spend less on hedging them than they will yield me in decay. There's also some other parts to that, in that I'm also trading the actual smile, but that's the long and short of it, by being on top of it. And sure, if there was and every 100 days or so, there is a 20% move in one day. And if that move all happened within one hedging quanta, it would be painful for sure.
Yeah. All right, we only got a minute left. Oh, Sergey had a couple other follow-up questions. First of all, do you sell your Delta Hedge subscription? I assume it's your auto hedger.
That I don't. There are some open source ones available on the market. We had that call, didn't we?
And we had talked about possibly offering something, but we don't have anything right now.
Yeah. It's a big responsibility, because if I build you an auto hedger, then I'm kind of liable for your losses, and I don't want to go there.
Well, your Delta, your hedger broke down the other day, and you had to manually fart around it until you could fix it. So
it cost me about. We've just been doing the maths on that, and it cost about $2,000 on a 50,000 account, so it's about 4%, because it broke down. Well, actually, there was a SSL certificate change at Deribits, and the Windows machine that my hedger was running on did not have the latest SSL root certificates, and we had to figure all that out while manually hedging with one hand and trying to solve the problem with another hand.
Anyway. So we're almost out of time here, Richard, so I don't want to cut you short. And Sergey says, can you connect me to voice? Actually, we can't do voice on our Deribit live calls, but of course I would invite you to join a free trial with us over at roguetrader.academy. You can join for 7 days, anything silver and above, and you can chat with us throughout the day on our Telegram channel. And then we have a weekly Ask Me Anything call where you can literally ask us anything. So time for one more question, and we got to shut her down. Let's see here. I'll take someone. Ivan. This not the shortest question.
Haley put this question up. I think it's worth answering.
I'm pretty new to options. How do you guys feel about wheel strategy? So I think the best thing to do, Harley, is take advantage of the trial period with us at roguetrader.academy, and because we discuss a whole bunch of beginner strategies there.
Yeah, and the wheel strategy has its place for sure. It really depends on your long-term objectives. So we'll just do one last question, and then we've got to shut it down. Ivan, and this is an older question, that's why I want to make sure we cover it. How do you guys explain the ETH IVs that are now lower than those of Bitcoin across the surface? I mean, normally a higher beta asset should command a higher realized and subsequent implieds. So basically saying that ETH IVs are now lower than those of Bitcoin. But I haven't looked.
They've been lower for a while, and actually, my ETH book has been earning money more consistently over the past couple of months than my Bitcoin book.
Right.
And that's unusual because normally it's Bitcoin that prints the money. Even though the implied vols on ETH have been lower, they've actually been higher relatively than the realized vols down on Bitcoin.
In the vol surface right now, yeah.
Look, I don't read anything into this stuff. I just trade by what it is. The market's going to do what it's going to do, and I've got no control over it. We just have to roll with it.
Okay, we got to wrap it up. So I'm just going to quickly cover our poll. Again, about 60% or so are saying to do an iron condor. There wasn't a lot of comments about days to expiration and strikes. I think we had one from Dom earlier.
Someone said do 45 days.
I thought you said 30. No, here's Dom. It's close to 35 days to expiration as possible. So I'll probably look at selling maybe a 20 or a 25 and then covering it with like a 10, something like that. I'll take a look at the numbers, or maybe afterwards Richard and I can look at some numbers and we'll come up with what we think would be a reasonable iron condor. We'll put that on. And next week we can see the results if we were horribly wrong and had to manage one side, or if we're just collecting premium the whole way. But we'll do it as a covered position, so it will be an iron condor. Again, thanks so much, everyone. It's so great to see so many of your regulars here. Richard, was there one thing you wanted to say?
Yeah, one thing that just on auto hedging, just so you know. So my institutional books I hedge hourly because customers, for whom you're managing money, don't appreciate it if you're not watching their books 24/7. But my own book, I've got a book in the Deribit, which I call Home Save. I just had a couple of Bitcoin lying around and I chucked it in there to play with. And that I hedge once a day. And actually, just to see what the difference is in terms of volatility of returns. And actually once a day, as long as you're not over trading, it's fine.
Okay. Fair enough. Okay, let's wrap her up here. Thanks again, everyone, for joining us. Of course, if you want to chat with us more often, hop over to roguetrader.academy, and any package of silver above, you can chat with us each day and have that weekly call. And for the rest of you, we will see you next Thursday, and look forward to talking about the new position we put on. Catch you later, everyone. Bye-bye.